Practically every life insurance agent out there will not tell you this, but I will. Infinite banking policies pay the least amount of commission, and that is why most agents will never set them up properly. My name is Devin Burr. Stick with me till the end of this video and you will understand the difference between a policy that builds you wealth and a policy that just pads the insurance agent's pockets. Let's talk about how agents make money. When you put premiums into a policy, the insurance company pays the agent a commission. How much commission they make is based on how they structured the policy. Most agents are going to structure the policy to be 100% base premium. Base premium pays the most amount of commission. So let's say that you put in $10,000 into a policy per year. All of it being base, because that's how the agent structured the policy. That agent makes anywhere from 50 to 90% commission off of base premium. So they're going to make anywhere from $5,000 to $9,000 in first year commissions. Sounds amazing for the agent, right? But guess who loses? You. Guess how much cash value you have from base premium in the first year? Zero. Guess how much you have in the second year? Zero. Base premium is basically paying a bunch of fees and commission up front. So here's the hard truth. Most agents don't know how to structure these policies correctly. And if they do, they don't want to do it because it means giving up a big portion of their commission. Let's be honest. If you could make $9,000 setting up a policy, or let's say $1,000 setting up a policy correctly for a client, which would you do if you were only in it for the money? Most agents, unfortunately, they're not trained in infinite banking. They're taught to sell a policy that benefits the company and benefits themselves. So they just slap together a policy, say it's infinite banking, and now you're left with a policy that grows like a snail. So how can you tell if it's set up correctly? So here's how you know if a policy was set up correctly for the infinite banking concept. First and foremost, you got to have at least 60 to 85% liquidity the first year. So let's say you put in $10,000, you got to have access to $6,000 to $8,500 in cash value that first year. If you don't have that, it was not set up correctly for infinite banking. The only way to have that is to have high PUAs, paid up additions. Paid up additions are like rocket fuel for the policy. They're really, really efficient. They burn really, really quickly. They give you a bunch of cash value. The thing is though, you can only keep paid up additions on a policy for so long. You can't put too much of them on to a base premium. If you do, it becomes taxable. It becomes a modified endowment contract. You don't want that. You want the policy to grow 100% tax-free. You want to be able to use it tax-free. So the agent needs to know kind of how to have that balancing act between the base and the PUAs. Third thing, it's got to be liquid within the first 30 days, not the first 3 to 5 years. You've got to be able to tap into that money right away so you can start practicing the concept of infinite banking. And the fourth thing, this is super important. The person setting it up needs to be a practitioner of the concept of infinite banking. If they're not practicing it in their own life, if they're setting you up with a policy that they don't do themselves, you need to walk away. In fact, you need to run away. Think of it like this. An infinite banking policy is like if you're starting to play golf. You've never played golf in your entire life. You've never even swung a club before, but you go out and get the best clubs. You get them fitted to you and everything, but you've never swung a club. You'd be better off actually using some really crappy clubs, perfecting your swing. An infinite banking policy is kind of like those really, really good set of clubs. They're amazing if you know how to swing them. The agent needs to be someone that can teach you how to swing the club. They need to be able to teach you how to implement the infinite banking concept. If they don't know how to teach you, even if it's set up correctly, you basically have a glorified savings account. So if the policy is set up correctly, let me show you guys an example of how you could implement the concept, because that is very important. If it's set up correctly, You got to be able to implement it. So let's say you put $20,000 into a policy. You deposit that into a policy. If it's set up correctly, of that 20 grand, it would be low base premium, high paid up additions. So let's say you have about $17,000 in cash value from the 20 that you put into the policy. You're going to deploy that cash value immediately in the first 30 days. So you're going to borrow against it. You're going to get a loan from the insurance company for 17 grand. And let's say you deploy it into paying off a vehicle. You have a car loan that you're paying 8% on. You got 4 years left. The payment is $438 per month. You guys can do the math. What I did is I took a 6-year car loan at 8% interest on a $25,000 starting balance. 2 years in, so 4 years left, you'd have about 17 grand left on that car note. So you're going to take the 17 that you borrowed from the policy, you're going to pay off the car. Now you don't owe the money to the bank anymore. However, if you were paying them on time every single month without fail, $438 per month on time with interest, because it includes 8% interest, all you got to do is take that same amount and put it back into your policy. So you guys can do the math on this. $438 per month for 48 months, that's 4 years, comes out to just over $21,000. So what happens is you're getting the full $17,000 back into the policy where it is protected against lawsuits and judgments. Plus, you're getting an additional $4,000 into your banking system. That $4,000 is interest that you are giving up to the bank. That $4,000, since you're getting it into your banking system, that's money you were giving up, but now it's growing for you. It's compounding, tax-free. Beautiful thing about this, guys. The entire time you're doing all this with the money you put into your policy, the money you funded your policy with, is still compounding and growing 100% tax-free, like you never touched it, because you never did. You just borrowed against the money you put in. Your money is collateral. You're borrowing the insurance company's money. So that's a very quick, easy example of how you can implement the infinite banking concept if the policy is set up correctly. So I will tell you this, infinite banking can totally change your financial future. It definitely did that for me, but only if it is set up correctly. If you don't get it set up correctly, you basically have like a super slow growing life insurance policy. But if it is set up correctly and it's implemented, you're basically putting your dollars on steroids. I mean, you can use them for your business. You can use them for real estate. You can use them for crypto. You could use them to finance a car, finance a house, finance a boat, whatever. You can do all those things while your money is continuing to compound and grow 100% tax-free, and it's protected from lawsuits and judgments. And then when the inevitable event happens where you pass away, your family is left with a tax-free death benefit. This is what the wealthiest families and the wealthiest individuals have done throughout history. If you would like a real breakdown with transparency on how to use this concept, check out the link in the description. This is all me and my team do. We only set up policies built for infinite banking. Why would we do that? Why would we lower our commissions in order to set these policies up? The reason being is we're after numbers. We want to help a lot of people become their own bank and take back control of their money so that they're not losing it to outside institutions. If you can become your own bank and not lose your money to these places like banks and other institutions, you can become very, very wealthy over time, because it's not about how much money you make, it's about how much you keep. So this is all we do. We help a lot of people. We do make less commission per policy, but there's power in numbers. When you do a lot of policies, even at lower commission, you still make a lot of money. So if you want help doing this, check out the link in the description. We will be happy to help you. There's no cost to the call. It is absolutely free. We get paid once you fund your policy. We get that little baby commission, but guess what? You're going to tell people, you're going to send them our way. So if you got value from this video, make sure to like it, throw your comments in the comment section. I'll make sure to answer all of them. If you're not subscribed to my channel yet, do that. Hit the bell so you get notified when I put out these videos. I would greatly appreciate it. Until next time, guys, I love all y'all. Peace.